Hi there, this is Sandra with the Mortgage Center. Another message to realtors for September 2022. So, what's happening with the mortgage market and interest rates? Well, we did see bond yields fall a little bit with a prospect of inflation that it was cooling. And that was good for fixed rate mortgages because we saw a little bit of a dip. But why are rates going up again in September? And the Bank of Canada is probably going to raise its overnight lending rate by a half to 0.75%. So it has to do with the latest core inflation numbers. So let's have a look at some of this data together. So this is the Consumer Price Index and inflation in Canada, and this is the total CPI. And you can see here, this graph right here shows that little bit of downward pressure on inflation, but the Bank of Canada is not looking at this number. What they're actually looking at is core inflation. And core inflation is essentially the CPI stripped away from all of the volatile items in the consumer price index. And what you'll find is that the Bank of Canada wants to maintain inflation between like 1% and 3%, and you can see where it is right now. So we actually saw a slight increase between June. June's number was at about 5.1, and we're at about 5.3 right now for core inflation. So there's quite a bit of um, rate increase that we need to kind of, and that's the Bank of Canada's main tool to manage inflation is to increase interest rates. Now, I didn't want to get too far into home sales, but this has a direct impact on what's happening with mortgage interest rates. And I know you have probably already seen this graph, but if you see where we are right now for home sales seasonally adjusted, we are lower than even pre-pandemic levels. And I would argue when I looked at some of this data, we were at uh, home sales seasonally adjusted, uh, similar to what was happening in the 1990s. And, like, is our home prices on the way down, and we know that, and it's not a myth anymore, it's a fact. And you can see here, this is like across Canada, monthly seasonally adjusted home prices. Now, for those of us who are in Guelph, we have already always been insulated. Guelph is have many things going for it, like a diverse economy, proximity to Toronto. Our home prices in June, from June to July, dipped only 2.1%, but areas, especially in cottage areas, we have seen 5 to 6% seasonally adjusted decrease in home prices. And part of the main reason is home affordability. And if you look at this graph, this is the housing affordability index. So these are housing related expenses as a share of disposable income. And if you look here, sort of the rule of thumb in what we say for the gross debt service ratio, it's somewhere between 35 and 39%. If you're like hitting the 39%, you're going to be feel like you're house poor. But when we hear about how affordable it is to own a house, it's not that affordable because of where house prices have gone, and also how interest rates have impacted those monthly mortgage carrying costs. And you can see here again, we are at 1990 housing affordability index, like back in the 1990s. And then if we kind of dig deeper into this, and I'm kind of getting to the idea of why home prices are have come down so significantly, is that if you look at the MLS HPI benchmark price, and this is for mortgages at 80% loan to value. So for people who have 20% down on a 30-year amortization, you can see here, like this is again across Canada. So these are Korea numbers, but like it's typically been at that 1,500 to 2,000. And I find in Guelph, it was typically between 1,800 and 2,100 because our average prices are typically higher than the average price across Canada. But now we're seeing prices up to over not prices, but monthly carrying costs just for the mortgage of over 3,000. And it really hit home when I was talking to a client who put an offer on a house for 650,000 and had 10% as a down payment. And the interest rates are between 5 and 5.5% on a 5-year fixed rate mortgage. The payment was about $3,300 a month. So if you take into account the payment on the mortgage, the condo fees, and the property taxes, they were easily paying $4,100 a month just for a condo in Guelph. Now, again, we are seeing a little bit of reprieve on the 5-year fixed discounted rates and also variable rate mortgages. And I think part of the reason why we're seeing that deep discount mortgage rates go down a little bit is because um, the bond market had a bit of a shift earlier this year. We'll probably start to see them come up again. But also, I feel like mortgages, although the rates are high, because of the slower activity, banks and financial institutions are giving mortgage sales. So some interesting information. I love sharing this information with realtors. If you guys do have any clients who need a mortgage pre-approval or some good advice about mortgage financing, remember we do mortgages for most chartered banks like TD and Scotia. We have access to credit unions, and then we have a whole slew of other prime and alternative lenders that we can help your clients with. So please do an email introduction or have them contact my office, and you can reach out to me at my website through my website at skipthebank.ca. Have a great day and thanks so much.